Volume-based versus activity-based costing. To explain this, it's best to use an example. So let's look at one. Our example is about a company that produces and sells two products, product C and product B. Here's some pertinent information. Let's start off by looking at the product on the right, product B. Product B is a high volume product with 20,000 units made. It has a selling price of $200 a unit, and all direct costs, that's direct materials and direct labor, total $80 per unit. The company is expecting these 20,000 products to consume or require 75,000 direct labor hours to make. That works out to 3.75 labor hours per unit. Now let's take a look at product C. Product C has a production volume of 5,000 units, which means this is the lower volume product line. The selling price is much higher, $400 a unit, and we can start to see why. The total direct costs, that's direct materials and direct labor, is $200, which was the selling price of product B. If we come back to product C, we could see that the direct labor hours is only 25,000 in total, but remember, that's for a much lower volume, only 5,000 units. That means the direct labor hours per unit is actually much higher. It's 5 hours per unit. The volume-based costing system assigns factory overhead based on direct labor hours. Remember, factory overhead or manufacturing overhead, it's the same thing as far as this example is concerned. The firm has a total budgeted overhead of $2 million. And since the firm budgeted 100,000 direct labor hours for the year, that's 25,000 plus 75,000 direct labor hours, the overhead rate per direct labor hours is $20, or 2 million divided by 100,000 direct labor hours. Product C, 25,000 direct labor hours, 5,000 units manufactured, and 500,000 manufacturing overhead would be assigned. How did we get that? Well, we take the 25,000 direct labor hours and multiply that by the rate we calculated previously of $20 an hour. For product B, remember we have 75,000 direct labor hours, 20,000 units manufactured. This means 1.5 million in manufacturing overhead is assigned. That's 75,000 direct labor hours multiplied by the previously calculated rate of $20. Overhead per unit would be for product C, $500,000 divided by 5,000 units, or $100 a unit. And for product B, it would be 1.5 million divided by 20,000, or $75 a unit. We can now look at per unit margins for a volume-based system. Again, we'll list a bunch of pertinent information. We'll start again on the right with product B. Product B had a unit selling price of $200, direct materials and labor of $80, and we just calculated the overhead per unit to be $75. That's a cost per unit of $155 for a gross margin of $45 a unit. Product C on the left. The unit selling price is $400. Direct materials and labor is $200 a unit, and factory overhead is $100 a unit. That's a cost per unit of $300 for a gross margin of $100. Let's summarize some of our thoughts about volume-based costing. It may be a good strategic choice for some firms when the costs to be allocated are relatively small versus the directly traceable costs. Also, when the activities supporting production are similar across different product or service lines. Often, it is used by paper product manufacturers, producers of agricultural products, other commodity firms, and professional services firms, So think of a legal firm or an accounting firm. They are very likely to use volume based costing, but many other organizations do not. You might remember a prior lesson where we talked about cost distortions and product cost cross subsidization. The solution to that was something called activity based costing. Before we do this example again with activity based costing, otherwise known as ABC, let's look at some key definitions. The key definitions. We'll start with resources. Resources are economic elements used in the performance of activities. They include all inputs such as labor, materials, equipment, and facilities that are necessary to carry out activities. Resources represent the costs incurred by a company, such as salaries, utility expenses, and depreciation. They are a starting point in the activity-based costing system as they provide the pool of costs that need to be allocated. We'll talk more about pools in a minute. Next, let's talk about activities. They are specific tasks or units of work performed by an organization to produce goods or provide services. Activities in activity-based costing are the actions that consume resources. These include things like machining, assembling, ordering materials, inspecting products. Identifying activities help in understanding how resources are used. Next, let's talk about cost objects. And you know what these are. They're items for which costs are measured and assigned. They can be products, services, customers, projects, or any segment of a business. Remember, a cost object is anything that we are trying to track our costs for separately and distinctly. The ultimate goal of activity-based costing is to determine the cost of a cost object accurately. So assigning cost to cost objects, businesses can then determine profitability and make informed decisions. Now, let's talk about cost pools. These are groups of individual costs, typically overhead costs, that are accumulated based on similar cost drivers or activities. A cost pool, then, is instead of assigning costs individually, similar costs are grouped together. For example, all costs associated with machine maintenance might be grouped together. Cost pools simplify the allocation process. Unlike volume-based costing, where all overhead is grouped into one or maybe two pools, activity-based costing might have many cost pools. Then we get to cost drivers. Cost drivers are factors that cause a change in the cost of an activity. They are measures used to allocate costs from cost pools to the cost object. Cost drivers provide the basis for assigning costs to activities and products. They can be transaction-based, like the number of setups, or duration-based, such as hours of machining or hours of testing. Now, speaking of cost pools and cost drivers, let's take a look at the prior example if the company was to break down their overhead into multiple categories known as cost pools. Here's some information. We'll go through it one by one. You'll remember from earlier, the total overhead was $2 million, and it was split up based on a volume-based system of direct labor hours. But now the business has more information. They can take this $2 million and break it down into various cost pools. In other words, they think engineering of $125,000 is part of the total $2 million. They also have another cost pool called setups, which they think will cost $300,000. Machine operations is the bulk of this overhead of $1.5 million. And then we have packing, which is $75,000. One, two, three, four different pools totaling $2 million. The important thing about these cost pools is the business also has a cost driver that they are able to track and measure with the corresponding pool. For example, for engineering, they think the number of engineering hours is something they can track. And they think that's a factor that is causal, or in other words, has a direct impact on how much this cost of engineering is going to be. For setups, they are able to track the number of setups. For machine operations, this business can track the number of machine hours. And for packing, they can track the number of orders or the number of packing orders more specifically. Next, we need some operating data. Here it is. The business is then able to look at the amount of activity for each of the cost pools it identified earlier on a product by product basis. Here's what I mean. Engineering hours, the business is able to track this, and they see that product C used up 500 engineering hours, product B used up 750 engineering hours. The total engineering hours was 1,250. The number of machine setups, it was 200 setups for product C, only 100 for product B, for a total of 300 setups. The machine hours for product C are 50,000. And for product B, it's 100,000 machine hours for a total of 150,000 machine hours. The number of packing orders are 5,000 for product C and 10,000 for product B, for a total of 15,000 packing orders. Now we can calculate the activity-based costing rate. Using the operating data, the activity rate for each activity consumption cost driver is calculated. Let's take a look. We can take the entire amount of engineering, $125,000, divide it by the entire amount of hours dedicated to that activity, and we get a rate of $100 per hour. We could also take the setup cost of $300,000, divide it by the number of setups, and we get a cost of $1,000 per setup. Machine operations is $1.5 million, divided by 150,000 hours, and we get a cost of $10 per hour. Finally, packing orders of 75,000 divided by 15,000 orders is $5 per order. We can now use these cost rates or activity-based costing rates and multiply it by the amount of each activity used by each product, product C and product B. Let's look at product C first. So the manufacturing overhead for product C, how would we calculate this? Well, remember for engineering, we just calculated a rate of $100 an hour. And from earlier in the video, we were told that product C uses up 500 engineering hours. That's total overhead of 50,000 or $10 a unit. If we take a look at setups, $1,000 multiplied by 200 setups for product C alone is $200,000 or $40 a unit. Machine operations, $10 multiplied by 50,000 hours. The total overhead is 500,000 or $100 a unit. And then packing orders of $5 an order multiplied by 5,000 orders is $25,000 or $5 a unit. This all totals to $775,000 in indirect costs or manufacturing overhead that should be allocated to product C, or an overhead cost per unit of $155. Let's contrast this or compare it to product B. The engineering cost for product B, remember the rates will be the same, but we are multiplying them by the activity consumption of product B, which is going to be different. It's 750 hours of engineering time, making total overhead for engineering to be $75,000 for product B or $3.75 a unit. It's 100 setups multiplied by $1,000, which is $100,000 for setup cost or $5 per unit. Machine operations works out to $1 million or $50 a unit, and packing orders will work out to $50,000 or $2.50 a unit. This means the total overhead for product B is $1,225,000 or $61.25 per unit. Let's compare. If we look at the per unit margins under an activity-based costing system, we'll see that they are different from what we calculated before. The unit selling price of each product is the same as it was previously, and the direct materials and labor is still $200 for product C, and it is still $80 per unit for product B. Where we start to see a difference is in the manufacturing overhead allocated to each product. It is now $155 a unit for product C. This is higher than before. And it is now $61.25 allocated per unit to product B. This is lower than before when we used volume-based costing. This means the cost per unit for product C is $355 or higher using activity-based costing. And the cost per unit for product B is $141.25, or it is lower when we use activity-based costing compared to volume-based costing. Naturally, the gross margins will be different. The product C gross margin goes down to $45 a unit, and the product B gross margin goes up to $58.75 per unit. We can quickly compare the two side by side. If we take a look at the unit overhead cost for a volume-based system, it was $100 for product C and $75 for product B. Once we got more data, we were able to more accurately allocate the manufacturing overhead costs. And product C, on a per unit basis, has an overhead cost of $155 per unit, or $55 higher. And product B has an overhead cost per unit of $61.25, or $13.75 lower. So if we take a look at the difference in margins, the margin of product C has gone down by $55, and the margin or the difference for product B, it's actually increased by $13.75. What this means is that under a volume-based system, product B was overcosted. Volume-based had it at $75, where a more accurate costing should have it at $61.25. This was overcosted. And if one product is overcosted, then at least one product is undercosted. And that's what happened here. Product C, the low volume product, was costed at $100 under a volume-based system, but a more accurate system correctly cost this product at $155. We could visualize the manufacturing overhead in a different way. Let's take a look here. We have volume-based costing overhead of $2 million, and that needs to go to product C, the low volume product, and product B, the high volume product. Once the allocation is done, you can see that most of the overhead in a volume-based system goes to the high volume product, product B. Let's compare that to a more refined costing system. If we look at activity-based costing, once again, we have the total amount of overhead on the left. That's the $2 million. But instead of one solid bar, it's made up of multiple cost pools because we have more cost data now. This still needs to be allocated. The same 2 million has to be allocated to each product, but we can do so more accurately. And so when we do it more accurately, you can see that product C actually has more of the overhead allocated to it than before, and product B has less overhead allocated to it than before. Perhaps it's easier if we move this to the right and then show you what was done previously with a volume-based system. Again, with a volume-based system, you can see that product B is overcosted and product C is undercosted. So now let's take a moment to think about what are some of the steps that need to happen to develop an activity-based costing system in the first place. Well, there are at least 3 steps. 1, we should identify resource costs and activities. An activity analysis is typically performed to identify the activities and the way in which the activities consume resources. Step 2, we assign resource costs to activities. We use resource consumption cost drivers based on cause and effect relationships. Examples: number of labor hours, or the number of setups, the number of times something is moved, the number of machine hours, the number of employees, or the square feet. These are all things that can be used to assign resource costs. Step 3, we then go ahead and assign activity costs to the cost objects. In other words, once you have your rate, you can go ahead and use that rate to cost each individual cost object. So, what is an activity analysis? An activity analysis is when we are gathering data from existing documents and records, collecting additional data using questionnaires, observations, or interviews of key personnel. Sample questions include things like, what work or activities do you do? How much time do you spend performing these activities? What resources are required to perform these activities? And what value does the activity have for the product, service, customer, or organization? It can take a long time to do this work, and it has to be constantly reviewed to ensure its accuracy. There are also different levels of activities. For example, a unit level activity is performed on each individual unit of product or service of the firm. You can think of something like depreciation of factory machinery, or the energy costs for machinery used to make individual units that are produced. Batch level activity is performed for each batch or group of units of products or services. These would be things like machine setup costs, or wages for workers that move the products within the factory, or the energy cost for machinery that is used for multiple units of product at the same time. So imagine an oven that bakes a batch of cookies for a commercial baker. That would be a batch level activity and cost. Then we have a product level activity, which supports the production of a specific product or service. These could be things like salaries for product line purchasing managers, quality control costs, product development costs, and depreciation and maintenance for specialized machinery dedicated to the production of a single product line. And finally, we have facility level activities, which supports overall operations. These are things like depreciation of the factory itself, security costs for the entire factory, insurance and property taxes for the entire factory, or the salary of a plant manager. It's useful to think of all of our different activities in one of these categories because it can help us identify what activities would be good measures or good cost drivers that we can use to eventually allocate our costs. Now, if this is so much work, what are the benefits of an activity-based costing system in the first place? Well, there are a few. One, we get better profitability measures due to more accurate costs. Two, we get better decision-making because we have better measures. Three, we have information for process improvement. Because we have detailed level cost, we can start to see where we need to improve. Four, we have improved cost planning. And five, it helps identify and control the cost of unused capacity. I hope you found this helpful. Until next time, I will say thank you so much for watching, and may your journey be joyful.
Let me tell you about a company with product C and B. One is mass produced, the other's rarity. Product B's a high flyer, 20,000 sold. At $200 a piece, the profits seem to unfold. Volume-based costing, it's easy but it's flawed. Spreads overhead by labor, but the truth gets ignored. Activity-based costing digs a little deep, allocates expenses right so your margins you can keep. Product C is special, only 5,000 made. Sells for $400, but high cost must be paid. Direct costs are steeper, labor hours high. Volume-based costing makes the overhead arrive. Volume-based costing, it's easy but it's flawed. Spreads overhead by labor, but the truth gets ignored. Activity-based costing digs a little deep, allocates expenses right so your margins you can keep. Volume-based special, only 5,000 made, sells for $400, but high costs must be paid. Direct costs are steeper, labor hours high, but volume-based costing makes the overhead arrive. Volume-based costing, it's easy but it's flawed. Spreads overhead by labor, but the truth gets ignored. Activity-based costing digs a little deep, allocates expenses right so your margins you can keep. Engineering setups, machine operations too. Packing all the orders, we know just what to do. Calculate the drivers, get the cost aligned. Activity-based costing gives us peace of mind. Now we've reassigned cost to where they belong. Product C's true expense has finally come along. Product B was overcosted, now the numbers show. With accurate data, our profits start to grow. Volume-based costing, it's easy but it's flawed. Spreads overhead by labor, but the truth gets ignored. Activity-based costing digs a little deep, allocates expenses right so your margins you can keep. So when you're crunching numbers, don't let distortions last. Choose activity-based costing and leave mistakes in the past. Better data, better choices, profits will increase. Sing along with BBC and find your financial peace.